Yes, it goes back to the DNA of the Standard Bank Group when it was part of Standard Chartered. Africa was not an alien place for us to operate. It wasn't something odd to explain to investors that we were looking at acquisitions in Africa. I think a lot of the investors who sat across the table from us were thankful that they didn't have to take the vaccinations and travel to the places in Africa, which to outsiders can appear formidable. But the value proposition that we were delivering, that there were assets that we thought were undervalued, and we had a skill set to be able to run banking operations in Africa. I guess at the same time, the spotlight had moved to the African continent as a land of opportunity. And in so doing, we were able to very diligently start to carry out the requisite level of research into both the macroeconomic scenarios in the countries that we saw as targets. But bear in mind, at that particular time, the South African breweries was also on the expansion trail through Africa. So we weren't alone. We'd also learned some lessons of the past, that sometimes running organizations far from home require very discrete and separate disciplines. And in so doing, part of the acquisition model in taking some of the more senior executives that already equipped themselves in the home market, getting them to do the due diligence and getting them to run the operations once you'd acquired them, with certain other requirements at a board level where if the chief executive wasn't your own, you appointed them, the chief financial officer and the chief risk officer were your own, or you had a hand in appointing them, led to a model that could stabilize a banking operation far from home and allow us to be able to not necessarily control it, but at least to know that the operations were under control. So the journey across the continent was incredibly exciting. And bearing in mind, in the early 2000s, the banking operations in South Africa, and I count all the banks in South Africa, were very, very advanced institutions. When one looks at the underlying technology on which the banks were run, the early deployment of real technology solutions into complex banking situations, no South African bank would be shy of being able to compete with international operations. And in so doing, the opportunity set was twofold. One is, we were brave enough to go and look at these places. And when I say brave enough, traveling into some of these places was not easy. The infrastructure was nowhere near as developed as it is today. Air travel was not, you couldn't do it commercially. Those routes didn't exist. And you were now going into new cultures with new challenges, with people that perhaps didn't know whether to see you as friend nor foe. But the South African has a particularly resilient and an endearing manner in which to be able to approach foreigners, and I say foreigners on the African continent. But our board and our boss made absolutely sure that we were not arriving as the takeover kingpins, that success in these targets was as much about bringing our expertise as it was about bringing the new participants, i.e. the target banks, into the Standard Bank fold.